What is going on, traders? Z here. Welcome back to the Traveling Trader. So a recession is now, in my view, inevitable. Now, I'm not saying that from the YouTube headline sense or the mass media sense. I'm saying that just based on data and based on economist predictions. We're going to go over data as we always do on this channel. I will show you why a recession is inevitable in my view. However, this is not all doom and gloom because I'm also going to hit you with how does the market perform during an economic recession? Looking at historical data, there's actually good news here because a recession tends to be a lagging indicator, not a leading one. So by the time we're already in a recession, most of the worst has already taken place with regards to the stock market. I will also be showing you what my targeted buy points are and what I'm doing right now in order to take advantage of lower pricing on stocks and indices that I want to own. Yes, you can name your own price through the means of something like a cash secured put, which I will get into later in the video. If this is the first time on the channel, welcome back to the Traveling Trader. Let's just get right into it. So you always hear the adage that, oh, if everybody thinks it's coming, it's not going to come. Well, that is definitely not the case with regards to economists' predictions of a recession. As a matter of fact, since the Wall Street Journal has been tracking this survey since right after the dot-com crash, every time that economists have predicted a recession that is close to 30% or above, it actually has happened. Right now, for the upcoming recession, whenever that happens, economists are now projecting an all-time high of 44% chance that we'll see a recession in the coming 12 months. Just to put this into perspective, this was at around 38% in December 2007 before the 2008 financial crisis, and at about 35% right when COVID-19 hit. So right now we are at 44%. Now, obviously, there are a few reasons for this. You can point to the yield curve, the inversion between the 10-year and the 2-year, which has signaled a recession every single time going back to World War II. But also it's because of Fed tightening policy and what the Fed is trying to do now. We have never seen a Fed raise rates into economic stagnation without causing a recession. As a matter of fact, in the last 75 years, every single time that inflation has exceeded 4%, which we are well above now, while unemployment was below 5%, which we are well below now, over the past 75 years, the US has fallen into a recession within 2 years. So we have this, we have the yield curve inversion. We obviously have the negative quarter of GDP that we saw last month, and we are getting a new GDP reading for Q2, July 28th. So if that one's negative, we will already be in a recession. And right now, economists are projecting 0% growth for Q2. So how does the stock market actually perform during a recession? Well, you'll be very surprised because, as we said, recessions are lagging indicators. So if you look at this, as a matter of fact, in a recession, the S&P 500 surprisingly rose an average of 1% during all recession periods since 1945. The S&P 500 typically hits a high 7 months before the start of a recession. And if you look at the S&P 500, we hit a high at around December 2021 or January 2022, depending on where you want to start counting. But let's just call it January 2022. Now, obviously, the 7 months is an average, so it could be more, it could be less. The point is that I think it's safe to say this is the market top before the recession, and we will likely see a recession within the next 12 months. However, as we recalled before, the average bear market lasts around 11 and a half months, and the average decline in the S&P 500 is 30%. And if you bought the S&P 500 down 30% at any point in history, you made money in the long term, actually in the short term, really. Now, here are some of the major events upcoming that can completely sway the markets, either give us a summer rally or really take us down to that next level and probably put us close to between the 200-week and 300-week moving average on the S&P 500. So between, 3,100 and about 3,500. We have the next CPI print coming July 13th. Pay attention to that because we want to see if inflation continues to go up, in which case the market will likely continue tanking since there will be no perceived answer to the price instability issue. We also have July 28th, we have the GDP reading for Q2. If that comes out negative, we will already be in a recession, rest assured. And then in July, we start to have the mega cap earnings once again. So all of the mega caps start reporting July, August. So if inflation comes in lower than expected, if GDP comes in slightly positive, at least not negative, any positive really, And if earnings start to come in and surprise, or companies start to give good guidance due to prices coming down a bit, then we could actually see a summer rally. That would not surprise me to see a summer bounce from there, because right now the market is technically oversold, historically oversold, and it is really looking for any forward answer to the price instability issue. However, if CPI comes in higher than expected, if GDP comes in negative again, and if earnings are muted, terrible, if companies say that they can't give guidance because of the inflationary issues, if the price of oil continues to go up, then we can continue to see the S&P 500 fall, and we could already be in a recession by then as well. So what am I going to do here from an investment perspective, since we could see a major summer rally? Well, since the market is already in bear market territory, I do think that you can sell cash secured puts here on stocks and indices that you want to own. And by stocks and indices, I mean quality stocks and indices, not hyper growth names. So to give you an example here of some of the plays that I'm talking about, these are some of the plays that we send out in our elite trading group. You could sell the 400 cash secure put on Tesla expiring December 16th for $2,600. If Tesla doesn't hit 400 or below, you get to keep $2,600 for free. If Tesla goes below 400, then you actually are assigned 100 shares of Tesla at 400 minus the $26 per share that you received to sell this put. So your cost basis on Tesla would actually be $374. This to me is free money. And are you willing to buy Tesla at $374? Of course, most people who are familiar with Tesla's stock price would be. Now, if Tesla's stock is too expensive for most people to buy 100 shares of stock, well, you can apply this to a stock like Amazon, for instance. So right now, if you go out to December 16th, you can sell the 90 cash secure put on Amazon for $535. Yes, you guessed it. If Amazon is not 90 or below by December 16th, you get to keep $535. If it is below, then you get to buy Amazon at $84.65. What is that? About a 21% discount from where Amazon is currently trading at. So the point is, in my view, you can utilize a strategy like the cash secure put in order to name your own price, because I think from here it is a bit precarious. Depending obviously on a lot of factors, there's so many moving pieces, nobody's going to be able to spot the bottom, not even me. However, I do think that we can nibble on a few stocks by naming our own price through a cash secure put. If things continue to worsen, then I will deploy more of my cash in pretty heavy amounts at around the 300-week moving average on the S&P 500 if we get to that 3,200 level. Just know that if you bought the S&P 500 every single time it was oversold on the RSI weekly, you made money. Literally every single time. So unless your retirement objective is in the next year or two, in my view, I think everyone should start thinking about what they're going to do here in the long term with regards to quality stocks and indices. Anyway, traders, that is it for this video. Hopefully I gave you some data showing you actually how the stock market performs during a recession, why I think a recession is inevitable, but why that is not all doom and gloom if you are a stock market investor, and what you can do about it using creative strategies like the cash secure put. If you want to learn more about the cash secure put or any other option strategies, consider joining our elite trading group full of thousands of traders talking about strategies all day, every day, literally trading all day, every day, day trades, swing trades, long-term analysis, etc. Crypto, we have a coach's corner. You get Zoom calls with me personally. There's a beginner section where you can literally ask any question you like. It's just a jam-packed community. Signups are closed. However, you can apply using the link below in the description of the video. Leave a comment down below. Let me know what you think the prospects of a recession are and what stocks you are actually investing in right now. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.